with me. I'd really like to welcome all of you. Ms. Ranju Siktia, Head of International Financial Institution Group, ICICI. Ms. Amrita Deve, Head Capital Markets, India and South Asia, SWIFT. Mr. Hitesh Kotak, Chief Executive Officer, Munich Re India Branch. Uh, Himanshu Kaji, Executive Director, Edelweiss Financial Services and Group COO, and Mr. V. Balasubramaniam, Bala for short, Managing Director and CEO of INX. So we start with you, Ranju, from the banking sector. We're looking at the next big leap for the IFSC. And 2 minutes. What are your thoughts?
Thank you, Saket. It's really a wonderful opportunity to be at this part of this panel. The way I look at it, IFSC and GIFT is basically the India opportunity that we are looking to capture. And India being such a large, prominent, and well-connected part of the global marketplace and the global ecosystem, it is but natural that we think about having a financial service layer housed within India itself. It's late in the day, but clearly I think it's the right thing to do. And the way GIFT has approached this opportunity, again, is to look at it in three ways. To one, reduce the imports, which is to say there was a lot of financial services that were being imported into the country. We had a lot of Indian banks, which were kind of set up offices in different parts of the world to service the same India opportunity because they were following the Indian customer. We have a lot of foreign banks operating in India, but they had their booking centers in different parts of the world. All of this is getting localized and in-housed at the GIFT City, right way to go. Again, there are various product segments where India is a large player, whether it is the index trading on the index futures, whether it's bullion, whether it is aircraft financing. All of this, we are large players in the market, and rightly so, we need to have the same or equivalent status as far as the financial services marketplace is concerned. And GIFT is doing the right things in making sure that we have the right seat at the table as far as these opportunities are concerned. I think the next thing then is once you've in-housed these imports, what is the positioning of GIFT? Do you want to make it as an access point or a gateway to access the larger India opportunity? Do we want to think about the GIFT as an entry point for the entire region? Hong Kong became a region for access to China, for example. Singapore is quite often seen as an access for the entire Southeast Asia region. Dubai is seen as an access for the entire Middle East region. So you actually have different financial centers which don't just restrict themselves to cater to the local opportunity, but play a more larger regional role too. I would envisage that GIFT can indeed play a role for becoming India opportunity by itself is large. Whether we talk about trade, investments, capital flows, the entire works that lead to the financial services opportunity. But there's also a scope or a potential for us to think ahead and larger and think about a more regional opportunity too.
Thanks, Ranju. Amrita, you sit in the middle of all payments and all money flowing everywhere. So, center or gateway? I mean, that's the question that Ranju has raised. What are your thoughts?
Thanks, Saket. Again, I'm very happy to be part of this very distinguished panel. I think it's discussing a topic which is really buzzing. We've had a lot of inquiries in terms of setting up a connectivity in the GIFT City. The way I look at it, I think a lot of the India business, as Ranju has mentioned, has been offshore, and that's traditionally because there's been a demand for India products outside, but foreign IFSCs have kind of captured this demand because we have been slow probably in setting up this entire infrastructure space. I think in the last 5 years, let's face it, it's only been 5 years for the GIFT City so far. We cannot expect a miraculous sort of runaway success in 5 years. But having said that, today, bringing a lot of that India business onshore is definitely going to be a perspective. But from my perspective, I think the GIFT City sort of stands at an inflection point right now. We've done a lot on the supply side. We've created the infrastructure, though it's still part of it is still in work in progress. Their products. We're setting up, connectivity options. We're setting up the regulations. But we need to look at how do we actually attract the foreign investors on this, this GIFT City aspect. I think we should be ambitious. But the most important point is, I think, how we want to position ourselves. Do we want to position ourselves, just as purely this India perspective, or do we want to become part of this global marketplace? Where they're globally entrenched in the flows that happen. Whether we can sort of, are we just going to be a standalone entity by itself? So I think the discussion should be probably also how we position ourselves to international investors. What kind of interfaces do we offer? What kind of products do we offer? What kind of regulations do we offer? And therefore, using GIFT as a lever, how do we become part of the global flows and the global economy? So that's, I think, the question for us at this point of time.
Thanks, Amrita. Himanshu, you for all practical purposes a wholesale bank. Apart from not having a banking license, you do everything else, right? Um, we have 523 participants watching this panel, which itself shows that what is the interest with which people are watching us. So with the panelists, I just want to take your permission to tell the audience, please type in your questions. I'm following that, and I will put that into my session and put those questions to the panelists. Please do that. And Himanshu, coming back to you, Amrita just mentioned that we're at inflection point.
Yep.
Now, how does Edelweiss see it? I mean, how do you see it? You're looking at it from inside to outside, right? So, how do you see it?
So thanks, Saket, and I think it's wonderful to be part of this panel. And I think the fundamental question that we have raised is a very important one. It is not about whether you are going to be a gateway in or a gateway out, or you want to be a center or a financial hub like a regional hub, or even a global hub like a London or a New York is. I think more importantly, we need to figure out what are our aspirations and what are our capabilities. And I think knowing our potential as a country, long term, we should not set our eyes lower than anything but becoming a global financial center. However, baby steps first. So I think the way I see it is that today we are looking at more as a gateway for India, gateway into India. If you see the products which are being offered, or the products which are successful from a capital market standpoint, at least, they are all gateway into India. Most of them are India-bound products, India-centric products, and involves Indian currency or Indian stocks or Indian indices. And of course, the all-time favorite gold, which is a very Indian fetish, I would say. But I think it is important that we set our sights on a long term and really articulate ourselves well right from now. Because what we want to be, and if it is communicated well, I think our vision and our choice will drive the participants that we attract, the products that we will allow over a period of time, the processes that we will follow, the incentives that we can expect the government to give, and everything else that is or will have to be done in order to be a financial hub. See, sometimes if you focus on a very narrow goal, because that's an achievable one and easy one, you may create infrastructure, you may create systems, processes, and even mindset, which then allows you not to grow beyond that. And this is a very famous thing that, what took you from 1 to 100 crore profit will not take you from 100 to 1,000. You have to do things differently. And it is better that we plan it in advance. But that's for doing that, certain more things will need to be done. And that probably we can discuss over the period of this panel.
So, Himanshu, I will come back to this. Certain more things need to be done. But before that, what you mentioned is that we've looked at financial services imports substitution at the moment as an IFSC, right?
Yes.
And we have Hitesh sitting here who looks at it from a global access inside out. So what's your experience, Hitesh, and what is happening there?
Thanks, Saket, and again, thanks for making part of this, amazing panel. Because it gives all perspectives together, from future perspective, as you mentioned. So as we see as a global organization, Saket, first of all, the global organizations are really first more interested over the India opportunity, to get into the mainland, India, as we call it, domestic tariff area for simplicity. And I think unlike say a Hong Kong or a Dubai or a Singapore, where the catchment area was much around the neighboring countries and not so much the local market, the global entities really first look at the India opportunity in a big way. And I think once they are much more comfortable and once they are much more looking at a long-term vision in India, then the gift opportunity really comes into the foray. And there, I have a slight different view. And while the gift infrastructure is outstanding, and I've been fortunate to be there a couple of times, once when it was conceptualized and once very recently, the infrastructure is great. The whole concept, the way it has come out is really outstanding. But I think one thing which is from a global setup, what is probably more important to be covered is the stability of the policy making for the global organizations in India. And I think once you make the global organizations comfortable in the mainland Indian regulations, only then they will start to think about expanding into GIFT cities. And there, from a reinsurance perspective, some of you are aware, there are still a couple of check boxes to be ticked mark. And the first and foremost being the tax rates. I think the global organizations are still taxed at prohibitively high 43.68%, and then it's very difficult, it becomes very difficult to be competing against local players. And I understand, in these times, protection is always, crucial for for each and every policymaker's agenda. But still, the difference between a domestic tax rate and an international rate is pretty high. And I think that needs to be addressed. And the second, very specific to insurance business, is the concept of order of preference. So right now the global reinsurers are already pegged at number 2, and GIFT City they are even pegged at number 3. So I think these are a couple of areas where I feel once you give the comfort, then the expansion really starts to begin into the IFSC area. The IFSC team has been really outstanding in terms of making the proposition aware, and I think a lot of global insurers are already aware of the proposition. It's pretty good, but I think once the domestic things are settled, only then people will start to move into the second stage.
So, Hitesh, I hear you. You're talking about policy alteration of some of the chinks that remain to fine-tune the gateway to open up to its full potential. Completely hear you. But before I take that subject forward, which also was mentioned by Himanshu in his subject, I want to come to the 50,000 crore man. 21st of October, 50,000 crores trading. Bala, you're just, absolutely sixer out of the stadium. What are your thoughts? You're on mute, Bala. Bala, you're on mute.
Yeah.
There you go. Yes.
So I think it's a pretty coincidence that we are now touching daily eyes as we actually get closer to the CII panel. But on a serious note, all what I've been seeing is over the last 3 years, we have been having on presence in the ground here. We started our journey in the IFSC in 2017, and the Prime Minister inaugurated our exchange. And he actually gave 2 clear messages in terms of the vision which he articulated, what he wants the IFSC to be. One, obviously, from a capital market perspective, he said that we need to be a big liquidity pool provider. So he said we should start aspiring to become price setters rather than just being price followers. Because today there are so many global commodities and global services which we use, but effectively it's some other country or some other geography which is actually setting the prices for a large market like India. So we wanted to actually now start becoming proactive in terms of getting those markets also to be built on our own base. The second message which he actually gave as a vision was basically this should become a very large fundraising center. So obviously we know that India is now growing at as a growth potential which is phenomenal, and as a third largest kind of a country, we need to kind of have huge amount of capital which needs to be attracted. So effectively from the inflow perspective also we need to attract capital. But apart from that, he said that it should not be only restricted to India, but also look at becoming the capital center for Asia as well as Africa and probably to Europe also. So effectively the idea is, as Himanshu said, we need to go phase-wise, but effectively the dream is to become large in terms of financial center. And if you recollect, basically India has a very like a huge history of being a free financial market for ages. Like for example, my parent exchange BSE was probably the first exchange in Asia way back in 18th century. So in some sense, what we are talking about is that this could be an opportunity. We have started a little late, but basically what the IFSC brings to the table is we are now for the first time created an SEZ enclave or an enclave which is free of the Indian laws and Indian taxes to a large extent. We have been exempted and carved out from many of that. Secondly, this is almost, I can say, it is actually internationalization of the Indian market, which is the next big leap in that sense. And if I give you an analogy, this could be a moment for our financial service industry, which is probably 20-25% of the GDP of the country, which is similar to what happened to the IT and technology sector, the ICT sector, way back in the 90s, when actually the STPs or the software technology parks came. And then over 30 years, we have seen that that has been a massive growth driver and also been a very big kind of a source for exports. So effectively, we are trying to say that we have done this successfully in one sector. Now we need to marry that. That's why the name is very appropriate. GIFT stands for International Finance and Tech. So both of them, fintech, all of that is kind of combined. And in fact, the government is very dead serious about it. In fact, they also created a new regulator purely for this place, which is actually modeled at enclaves like Singapore or Hong Kong, which are very small enclaves. And similarly, for example, in London, you have Canary Wharf. But effectively, what we have tried to do here is basically look at all the best models which are available and see how we can actually build out this center. On the capital market side, already in the last 3 years, we have seen a good progress. When we walked in, we were not too sure what we are getting into. But then we had promised the Prime Minister and signed up for this in the Vibrant Gujarat 2015. And finally, in 2017, before the Vibrant Gujarat, we fulfilled that promise. We already, as a BSE group, invested close to 400 crores, created world-class systems, infrastructure. In fact, our technology is a global technology. We use it, the same technology which Eurex uses in Europe. So effectively, all global customers are already connected to it. So it's plug and play. We use the Swift message bus to connect with all ICSDs. So effectively, we have built in all the interconnectivities with all the international custodians and depositories. Similarly, Edelweiss, probably the first firm which actually became our member. So they are working with us. And similarly, ICICI is our settlement bank. So if you look at it, basically, all this journey started over 3 years. And now I think we are at an inflection point. And recently, on October 1, 2020, the IFSC authority has been notified with full power. So effectively, they are taken over from the multitude of Indian regulators, whether it be RBI or SEBI or IRDA or PFRDA. So effectively, all 4 sectors, whether it is the banking sector and the NBFC sector, or the capital markets, or the insurance and the pension sector, now all are coming under a single regulator. So you're not going to see a lot of overlaps. And this new regulator also, in their constitution, in the act, has been actually imbibed with developing as a big role. It's not only regulating, but developing and regulating markets. So effectively, to that extent, they will have to look at how we can compete with other offshore centers, which are today taking away a lot of the India business, whether it be Singapore on the east or Dubai on the west, or effectively Hong Kong, London, or New York. In fact, even our rupee markets are all pretty largely traded on the London markets, and so is the insurance markets. So effectively, we can look at, even if we start small and we start grabbing something, it will become a very fast kind of growth. For example, this 50,000 crore number or a $6 billion number, it's something which I still feel is too small. We think we should be aspiring to at least do 10, 20 times the size of what we are doing. And this should be happening over the next 2 to 3 years. And I think it's absolutely possible. So I'm very, very bullish and very, very positive about this whole thing.
Thank you, Bala. So, what I listen from you, sorry for the background noise. What happens is when you work from home, this is something that you can't avoid. So apologies for that. Now, Bala, you talked about Edelweiss being your first customer, using Swift, and ICICI being your banker. Why have you left Hitesh out?
So at some point, we could probably create an insurance exchange, and effectively just like the Lloyd exchanges in London. So probably at that time, Hitesh could become a key player, and we will be happy to partner with him to do something.
So, Hitesh has a complaint on this panel as he started. So I'll come with you here, Himanshu, on just shifting gears at this moment. Now, we know that Gift City has constituted a 7-member committee to suggest ways to enhance the international center, right? As you can see, Hitesh is feeling alone. He's feeling left out. So what do you think should be done for him to come into this family now?
So I think generally speaking, there are 3 or 4 things that we can do which can attract more players across the globe. And I think the first one is the building of a quality financial community. incentivizing a mix of domestic and international financial institutions to establish a sizable presence in IFSC through availability of infrastructure, financial incentives, and simpler norms. This will have a cascading effect on generating global participation, including retain the activity that was being imported hitherto. I think the other one is strong communication and supportive service. And I think I take Anuradha's point there. While infrastructure at GIFT has come up by leaps and bounds, it still faces a gap in comparison to global peers like London and Singapore. In this context, I think a concerted effort to establish infra in terms of structures, digital connectivity, utilities, and accessibility will go a long way. And I think last is what Hitesh touched upon, some amount of stability in laws. I think this is one factor that makes us stand out. We have a very stable political environment. I think we are a democracy, a vibrant one is that, and global players take a lot of comfort in being a vibrant democracy. I think what they are looking for is, as Hitesh pointed out, is some amount of consistency and continuity of economic and regulatory policies. And I think if we can do that, it will be a big differentiator for us, because I think if you look at it at our advantage is our cost arbitrage. Labor is trained, it is English speaking, it is skilled. At least in financial services, you will get enough skilled labor, and it is reasonably not that expensive compared to the other financial hubs. And so is our infrastructure cost. I think if we remove the frictional cost, these two can become very cheap, and a big a sheer tax, arbitrage, a cost arbitrage will drive global players here. Then what we need to do is only offer them access to global markets. That is how the Singapore and Hong Kong has done. They started with access to domestic market, but ultimately expanded to giving access to global markets. Sitting in Singapore, you can do capital market activities across the globe. And I think our aspiration has to be that at a point in time.
Thanks, Manshu. Amrita, we were talking earlier of frictional cost. Just to come to you, based on the Global Financial Center Index, IFC ranks 66. Why is that? I mean, what needs to be done from an international perspective?
Right. I think that's a good question. I like the point about frictional costs. Can you hear me?
Yes, very well.
Okay, great. I like the point about frictional costs. While we've done an amazing amount of work on setting up the infrastructure and the products, I think, let's face it, we're still a cash settled market. Okay, so we don't have stock settlements in place at the moment without a CSD in place. We need to have some kind of multi-currency local clearing in place. Today also banks on the ground actually look at visibility of funds in the nostro and things like that. I think the most important point to speak over here is the fact that if we are to get international investors like the others have done, there are two kinds of IFSCs. One that have been traditional trading outposts, the likes of London, New York, Hong Kong, etc. Can you hear me? I'm sorry, I'm just losing connectivity. Yeah, okay, great. So, and they have traditionally been, the sailboats, the steamers using paper and then replaced by SWIFT. And then there are the other ones that have been really shooting up the curve, like Shanghai, for example. And Shanghai has used, infrastructure that they have a very strong economy. They have used that very, very strongly from a state support perspective. And they've also kind of, have the attraction factor to get people to invest in that market. Now, if I need to get people to invest in that market, I need to be able to create a strong demand for my product to create a strong demand on the ground. You spoke about taxation, you spoke about, having attractive policy that is consistent, but also you need to have a very, very strong, vibrant ecosystem that needs to be created, a very vibrant, the technology needs to be leveraged. You need to have standardized processes in place. You need to have clearing and settlement, both in cash markets as well as, derivative markets. You need to have, the entire Forex business that comes on board. I think Shanghai has been, the true winner over here. What additionally has been done is, where you are not able to do that, where you're not able to sort of create that specific demand, you need to be able to create enabling factors. Now look across the world in terms of what DIFC has done or what Singapore has done. All right. If I look at Singapore, they have consistently looked at creating wire regulations, very strong fund management regulations by providing structures that are international, by providing structures that are, say, for example, they really recently started this variable capital cell, product where you actually co-fund 60% of the expenses of the fund. And in 1 year, 120 funds have been set up over there. DIFC has actually looked at, fund management business from another perspective, because DIFC was, they went and signed MOUs, for example, with ESMA, where you can basically provide distribution support to fund managers. Initially, when Singapore was setting up, not just setting up the infrastructure in place in terms of the connectivity, but they also sort of gave support in terms of investment. I'm being a little controversial, but also investment support. Okay, so what are the new things that you can provide to fund managers to come here? Like we do have we want to get a lot of the India business coming back on board. The NSE SGX Connect. Want that to come on board, but you want the fund managers also to follow. Otherwise, you're going to be still trading most of the business offshore. So create the structures needed. Taxation is one aspect. Create the infrastructure needed in terms of technology, where both cash markets as well as derivative markets can function. Create the infrastructure which is needed in terms of forex, and make the infrastructure standardized. Now, if I look at a global bank today, there are hardly any global banks that are operating, and this is in process. Global banks don't want an outlier in terms of the way they operate. If an HSBC operates in 100 markets across the world, they don't want to customize operations just for one market. So you have to be connected in terms of the rails. Investors would like to have visibility and a consolidated view of holdings. When you have global credit lines in place, your assets need to have referenceability in terms of the assets that you hold in a particular center. As I was talking of DIFC, they actually created this entire infrastructure where they got this marketing support. So if I were to look at DIFC, if I look at GIFT City, for example, can I create sort of MOUs with international regulators? Can I create, be part of the Asian Funds Passport program, where I have international funds that can look at feeder funds set up in GIFT City? Maybe I turn the model that you have currently for the FPI participation, like if you are registered as an FPI in India, you get, onshore GIFT City, you get automatic registration. Can I turn that on its head? And I say, you come to GIFT City. If you want the India Connect to domestically operate and you have the INR trading, and if you want to do USD settlements, you have that. So I have a one-stop shop set up in GIFT City. Okay, so I'm turning the model on its head. Plus, I'm signing the international regulator, international MOUs. I can basically be a connect or a gateway to invest in all these markets via the Funds Passport program. China did that very effectively, when they had a lot of these international, indices that were traded outside of the country by the likes of SGX, and they're not just doing it for India market, they're doing it for other markets as well. China took that power back and said, you want to trade it, you do it on my shore, and they established the Hong Kong Stock Connect, which allows northbound trading, but you can't do it, in a very individual, isolated manner. You have to give the necessary infrastructure that builds along with it, which Ivanshu has said, with the vibrant ecosystem, the technology perspective, a standardized rails, and a consolidated sort of all-pervasive view where India is one of the marketplace, and that's my view.
Got it, Amrita. So, what I hear from you is, standardization, creation of demand, and especially on the institutional side, right? But there is, I will come back to the institutional side and I will post that question to Hitesh. But before doing that, India has 1.8 billion people. So there is a case to be made for retail vibrancy. So before I come to institutional and we get lost within that, let me come to Ranju and come for retail vibrancy. What do you have to say?
No, I was thinking about, when Amrita was talking about vibrancy of the gift ecosystem. Clearly, right now, as far as the banking opportunity is concerned, I think right now it's been fairly calibrated and fairly limited. And why I say that is that the ability of a banking entity right now is largely focused on the corporate banking entity. And even within the corporate banking entity, it's fairly limited, largely because, the starting point of a relationship, which is an account opening, starts only for entities which are present in the GIFT. So if a bank which follows its customers has to do business in GIFT City, has to wait for his customer to first set up office at GIFT, and only then can bank get interested. So that's really a high entry barrier. The retail opportunity is completely out of bounds for banks right now, because and that's a large miss, so to say, because Indian banks which are present outside cater to a large part of this opportunity. Talk about NRIs, we're talking about 3 crore NRIs. That's almost like, if we were to rank by population countries, the NRI population would actually be amongst the top 50 countries by population. And the wealth that they have amongst themselves is in the context of 3 trillion. While it's not necessarily a nice number to quote, but that's almost equivalent to the GDP of India, right? The annual GDP of India. So to that extent, we're talking about a large wealth in a large population that is out there. And you are creating GIFT as an ecosystem and investment destination. We are talking about promoting a lot of products around, making it an attractive investment destination and a fundraising destination, as Bala alluded to. Excluding the NRI has two connotations. One, of course, you're overlooking a large segment that is ready and understanding of the ecosystem here. And second, the positioning to the external world. If you're saying it's not safe or not fit for NRIs, how are we actually positioning to say that it is fit for the rest of the world? The other opportunity is also the large retail opportunity that is there in India. You're aware of the LRS, and there you have about 18 to 20 billion dollars. Out of that, close to $1 billion flows out as investments and into debt and equity. GIFT ecosystem is creating a lot of investments which are gateway to the outside world, and I'm combining both, inbound and outbound in some sense. How about making all of these investment products eligible for investments by the local resident as part of their LRS entitlement? That's what I meant, that adds a layer of economic activity, investment activity, and obviously then the banking activity flows. One has to be cognizant that when you are talking about addressing these segments, and a relevant point about comparing with other ecosystems, also to say that when DIFC, there are organic IFCs which kind of ride on a natural activity base that they have. East India Company led to a lot of trading activity with UK, and hence UK is a financial hub. US global dominant currency. Hong Kong has a China Connect, and hence there's a reason for that economic activity, and hence financial services activity to be centered there. As far as India is concerned, what's the resistant, despite having so much of natural advantages in terms of economic activity? Why is it that we needed to create a GIFT as something which is outside of India in a way to create that attractiveness? That's because we had to address some of the issues that were there. It could be regulatory, it could be tax, and it could also be the legal infrastructure. You have to, when DIFC set up an alternate system, for example, clearly even the legal infrastructure needed to be addressed. You had to give confidence to external investors that I'm not under Islamic law, which you don't understand, it's more Western market. So we created our entire legal, the DFSA got set up for regulatory as well as legal. Maybe I'm coming to you, Saket. You will have to play panelist along with host, but I saw the look on your face. Maybe it's going that way. But some of these things are essential for it to make it a more comprehensive banking opportunity. But I can see that you're bursting and waiting to talk.
No, not at all. I was just hoping you won't say legal. and you said the L word. Oh. Anyway, so let's go to Hitesh. so Hitesh, coming to you, right? I mean, what I hear is, GIFT, generally speaking, is sold as, and that is the tagline of GIFT. Please come, we will sort things out for you. Yes, the regulatory infrastructure in India is not, it's not the best. It's not the best because there are multiple regulators overlapping, multiple regulations, and lawyers don't help. We go to court at the drop of a hat. You have PILs, etc. Of course, Ranju has alluded to that, and I accept responsibility. So, what more in gift? What will it take? You mentioned two things. One is tax, and the other is regulation in your opening comments. So if you could just do a little deep dive to that.
So if Ranju would not have uttered the L word, I would have definitely done that. So thanks,
Oh.
Ranju, for bringing that. Because no, I mean, clearly, see, DFC in Singapore, the reason they stand out is because of the good ecosystem that even Himanshu alluded to has been created. You have a very robust legal arbitration center in-house. So a lot of comfort is drawn by the global organization. So anyway, since Ranju's already addressed that, I will not repeat it. From a tax perspective, see, DFC's done IFSC Gift City has done the right thing. They've already given a good tax rate. My point was more about the tax rate in the mainland, because for global organizations, first the mainland problem gets solved, and then it comes to the Gift City. So sometimes I feel little sad for the Gift City, because for no fault of theirs, it becomes a slight issue to convince the global organizations to get into the Gift City. The second point, which I would like to perhaps is see, insurance and reinsurance, and particularly reinsurance is a very capital intensive business. Even today, as all the foreign branches in India, and there are 10 of them put together, they've already put in about 25,000 crores out of capital in the last 3 years. Now, since it's a very capital intensive business, the basic expectation, is that the regulatory oversight or the regulatory approach is not similar to what you have. Probably it is benchmarked to the world's best. And I think that is, I would say, if there's one wish list, the wish list would be that can we at Gift City already benchmark ourselves to, say, the Solvency II norms that the European Union is following, or the risk-based capital that the Singapore is following? Because see, unless you are able to leapfrog, into that kind of a regulatory environment, it's very difficult to put a compelling story behind it, because you put in all the necessary tax and other ecosystems in place, but if the regulations are still going to be slightly different from what the world has already moved into, then it takes a bit of a challenge. So my recommendation would be, if the mainland India can still take some time to move to risk-based capital or Solvency II, which is equivalent to the Basel 3.4, can we at least in Gift City move straight away into leapfrog into that kind of regulatory environment, which can immediately attract a lot of attention. See, we'll have to do something beyond what a Dubai or a Singapore is doing, really to edge them out, because clearly they have a time advantage, clearly they have a geography advantage, and clearly they have been able to establish the necessary comfort, that was desired at that point of time. Now, if you have to break that barrier, we'll have to kind of come up with something which is at the least contemporary with that, or if something, then even better than that. So light touch, less procedural, more policy oriented regulations, I think that would be really the order of the day. And if I have to get into really specific, Saket, then things like retrocession, which is of course 90% allowed in Gift City, but then it doesn't give you the benefit of the 90% retrocession, because your capital requirements are still based on the traditional concepts. So you might still retrocede 90% back, but you still need to provide capital based on all the risks that you're taking. So you're not getting the capital benefit out of retrocession, at all. So somewhere these things become very contradictory. And once you get to the paper and once you get to the real drawing board, these things have to be addressed. And unless these things are addressed, it becomes very difficult to move forward.
Got it. I hear echoes of what Amrita said. We want consistency around the world so that the cost of regulatory compliance comes down. And this is something, when I am looking at globally, when I'm advising clients, the regulatory cost is going up. I have managing directors of banks that are telling me if I want a producer, I can't get one. But if I want a compliance guy, I get the sanction immediately. So the world is changing into compliance, and that means I need to reduce cost out there, which means certainty of regulations and similarity of regulation actually gives me that. Now I'm going to shift. Bala, you want to say something? You're on mute.
So just to come back to your question on the global center ranking of 66, all I can say is Rome was not built in a day. So it is going to take some years for GIFT also to get to that stage, which Himanshu rightly said, first to become a kind of a finance center, then become a regional hub, and then eventually a global financial hub. So it's a journey which has to be traversed. But from an emerging center, the same body has actually ranked GIFT as third. So that is also an important thing, which means people look at it with a lot of promise. So that is very important for us to do. Now, from a broadly the perspective, what we need to do, right? As you said rightly, that certainty is something which all international investors want, whether it is tax certainty, whether it is regulatory certainty or policy certainty. To that extent, say the new regulator which has come in IFSC has to clearly embrace these principles very, very strongly. And obviously, we should not be doing any more flip-flops in terms of doing 2 steps forward or 1 step backward. So I think there is going to be some incubation period which the international people are going to look at for judging whether GIFT is going to do any of that. If that doesn't happen, then obviously the floodgates will open and people will start getting a lot more confidence to come into GIFT. So it's obviously a lead lag kind of factor in terms of bringing in the confidence, and obviously the policymakers will have to lead. Primarily, what we need to do is we need to basically allow a fully diversified portfolio and encourage product innovation in the center. Allow more participants to come, whether it be from international side or from domestic side, and reduce the cost of doing for them. Address ease of doing business for them. Make stocks, tax norms competitive and keep it competitive when our other regional hubs and global hubs do make changes so that we are competitive and at par. But at the same time, we want to be part of OECD and we want to be part of FATF. We should not compromise on any of those principles. And obviously, friction from primary market is required to be removed in terms of allowing more people to come and invest, which includes getting investor ecosystem to come here, which actually I think Amrita did talk a lot about. And improving the social ecosystem to attract people to come here, and obviously the competitive regulatory. These I think are the 7 pillars which actually will push GIFT IFSC to move rightfully to that place, and probably on the center index, probably a few years down the line, will be probably in the single digits, if not in the double digits. So that's the path forward for us.
So, I feel as if I'm cornered here. I'm not on the panel and I'm being hit over and over again with law and regulation. So I am supposed to be asking the questions. So I'm going to go back to asking the questions. Himanshu, coming to you, there's a question from the audience. So let me sort of build that into your comments, into please protect me in your answer in this one. This is, what is your view of allowing foreign insurers to issue or raise equity on GIFT? And this is something Bala would really like. In compliance with their home country laws. What I find is legal friction, it seems to be coming up over and over again. Certainty of contract is the basics of commerce. So, go with that. I mean, take a pot shot at me also, Himanshu, no problem. You're on mute, Himanshu. You're on mute.
Yeah, sorry. I'm not an expert on insurance contracts, so but I think as I mentioned in my opening remarks, there are a lot of other low-hanging fruits that we need to, achieve. And it is better that we focus on things which are more familiar and can be done rather than those which are experimental and which have not been done earlier. So I would rather put this in the order pack. It will be somewhere at the bottom and not at the top at this point in time. I think also from a fact that India itself and GIFT is an offshoot of India, whether that's a reality. India is a capital scarce country. India needs capital. I don't think we should focus unilaterally on things where capital is going out. Rather than we should do more for attracting the capital in. So it's a matter of priority. I mean, you can be everything to everybody, or you can be a set of things to a set of people. And it is focus versus general. And I would believe at this point in time, focus will play a better, it will be a better bet than a generalistic approach.
Himanshu, just staying with you, when you say focus, can you just do a little bit more deep dive into that and say, where? So Bala outlined 7 pillars. That is more broad based, right? So that is the future. That is the future outcome of GIFT City. But what about here and now? Where is the focus?
So I'll tell you 4 or 5 things that we can do probably in a shorter span. I think the first one is, sovereign support is a key element of any new initiative. And the government has done a fair bit in pushing for IFSC as a key destination for foreign investors. This could be provided a further fillip if the central government was to take a direct or an indirect stake in IFSC. This will also reduce the borrowing cost for the center as such, and also help improve the across the globe. I think also, if you see, most IFSCs are partially, fully, directly or indirectly owned by the country government and not by the state government over a period of time. And I think that is something that probably could be considered. The second one is, we've done very well to have an International Financial Services Center authority so soon in our evolution and as a unified regulatory authority. However, we will have to ensure that the scope and the authority vested with IFSCA, which is expanded over a period of time. And I think it should be starting by saying that the rules governing creation and approval of new products and along with consultation with the existing regulators and the markets should be the first step. I think this will help IFSC not only retain a cutting edge in terms of product innovation and introduce products like ETF and GDRs on par with global hubs, but it also help in respond more swiftly and proactively to the adverse changes in the environment. The third thing that probably we can do is, there are issues relating to stamp duty which can be ironed out, and taxation in general. I think they've done very well to provide the rates that they've prescribed. However, taxation is also a double-edged sword. You don't want to be treated and perceived as a tax haven, and I think that is a very important element for building credibility. But at the same time, some tax ease outs, especially in terms of processes and day-to-day operations, could go a long way. And then there are certain, reforms in terms of, like, for example, I'll just give you a few. PAN for fund houses who invest in GIFT City can be at scheme level and not at a fund or a platform level. This will reduce the tax burden for them. Allowance, you should provide for direct dollar clearing or clearing in major foreign currency. I think Anuradha touched upon it. Or, today you have to set up a broking or a trading active entity in a GIFT City and be a member who is trading from IFSC. The exchanges are obviously located in IFSC, but can we have foreign members directly? Because the foreign investors who have FPI entities probably may find this kind of a double administrative hassle. Another one is, I think we can increase the attractiveness immediately by allowing participants which are registered or incorporated in GIFT to trade various financial instruments across the globe. This will overnight bring GIFT IFSC on par with Hong Kong and Singapore. So these are some of the suggestions, and I'm sure all of them are under consideration. At the right point in time, the authorities will do so. But these are from all angles, that are from taxation to product innovation to regulation to ownership and acceptance, that probably can be done in a shorter span.
So just to add to Himanshu, in terms of the focus, I think there are 3 or 4 areas which clearly the IFSC is focusing as a low-hanging fruit. One is obviously the capital market area, where actually we are trying to bring back the exported financial products to be actually traded in the IFSC. And that I think we are well and truly begun on our journey, and we are on the way. The second area, which I think has been recently announced, is that gold, which is again something which is very large in India. So they are talking about an international bullion exchange to be set up, which could become again very dominant. It could be delivery based, and effectively they are creating a free trade warehouse zone. So that again is a very, very important kind of initiative which the government has taken. And these powers have been given to IFSCA because today in India, none of the regulators had actually say over the physical gold. But IFSCA in this jurisdiction has been given that power. Third thing is, they also said from a job creation perspective, they have just come up with a notification wherein the big global companies initially could actually put their in-house in-source centers out here in GIFT, and that also is going to be regulated by IFSCA. So effectively, being under SEZ, most of the labor laws are already exempted. So this will actually start bringing familiarity to many of the large companies, because then obviously given the lower cost of human capital in terms of the labor which is available here, and plenty of talent in terms of sophistication of KPOs, etc., which you can handle, I think this will become a big booster, and that will become a good kind of a dip testing for these international companies to first come through these services, and then eventually they will start getting into much more value-added services or front office services. And the other one area which recently I think is going to be announced, which I think is happening, is that they're going to create a pretty large logistics park out here within the IFSC. And basically that will ensure that a lot of the movements which are happening on imports and exports, all of that could get streamlined because they will have a kind of an IC sale area kind of thing which is available in an enclave. So these are few things. Apart from that, the new green shoots are, they have already come up with a policy for FinTech Hub. So the regulatory sandbox policy framework is already out from IFSC. So many new ideas, many new startups, all of these accelerators can all be kind of done here. Apart from that, we are also talking about some basic infrastructure, especially on the dollar clearing, because today we don't have a dollar clearing center out here. Hong Kong, Singapore are dollar clearing centers. So we need to kind of get established, and we should be looking at least the G3 currencies, the dollar, euro, and the pound, all three to be locally cleared here. I think some steps are already mooted, and they should probably happen in the near term. And if that happens, that would be very useful. And again, we have a very big strength because unlike Hong Kong or Singapore or Dubai, all of them are local currencies. Here, there is no local currency. Here, we directly adopted the international currency, that is dollar. So effectively, there is no friction for the participant. There is no conversion cost. There is no kind of a market risk. So these are some of the strengths which we have. Obviously, 7 or 8 areas we may try. We may probably succeed in 3 or 4. We may not probably succeed in 3 or 4. But that's the way to go. And that's how any financial center will keep on evolving, because some things will kind of work, some things will not work. But again, the idea is to keep on trying new things and focus on few things and give everything a good shot to make that happen.
Bala, thank you for that deep insight. So, Amrita, it seems that IFSC has done a lot of the recommendations you were making. So, are you now convinced that we are all ready, get set, go?
I think we've made a lot of progress, and I think at the beginning Bala said it's just 5 years. Okay, we cannot expect fantabulous success to come us in 5 years. It's a long way to go. It's work in progress. My few points that I think just to summarize what everybody's been saying, you need to close the gap as far as the products are concerned and as far as the infrastructure is concerned by getting all these market infrastructures in place. The local CSDs, the clearinghouse, the CCI-like infrastructure. The second point is I think you need to rationalize a lot of things. What kind of account structures do you allow? What kind of fund structures do you allow? And I think it would be a great idea to create sort of a task force to get these fund management regulations in place at this point of time to see what more can be done. The other aspect is take a leap out of, the entire leapfrogging aspect which Hitesh spoke about, I think is fabulous. You are just starting out. So I think other than the standardization aspect, which is very close to my heart, you digitize with a vengeance. Okay, you digitize all your confirmation processes. You digitize, and not just messaging. I mean, go beyond messaging and look at, for example, APIs completely. Like India completely bypass the entire analog generation and get directly into digital. You look at leapfrogging there with, say, APIs. So that you are able to offer new technology. So you reduce your cost of operation for your international investors, and you ease the transaction access for your international investors across the board. Singapore recently Swift entered into a MOU on the trade finance side with the Singapore Infocom Media Development Agency, where we are looking to digitize the entire trade finance documentation. So the entire pandemic threw up this entire bit on why physical LCs have got to go across. So why not just digitize and make it paperless? So similarly, can you digitize account opening? Can you digitize a KYC? Can you digitize, clearing settlement, confirmation, all of that? So I think close the gap, continue to build, rationalize, like, for example, omnibus account structures versus the beneficial account structures. Look at gift as the lever rather than the other way around. And finally, leapfrog and digitize. I think if you kind of get these things together, I think we've got a pretty good thing going.
So
I totally agree with Amrita. Digitization is the key, but also one should remember that the Indian stock markets were the one which actually became totally electronic first in the world. So not even before US, before the other markets. And obviously today, everything which is happening on our ecosystem is totally digital. So all we need to do is basically focus. Obviously, we need to now look at digital asset classes and other stuff which needs to come in, which so far has not come in. But those are some of the keys which we should do. And in terms of connectivity with international agencies, including ICSDs, I think already those connectivities are already established. We are already talking to both Clearstream and Euroclear from GIFT. And in fact, we have, in the last 2-3 years, we have managed to raise close to about $50 billion of debt for Indian corporates, which also includes some multilateral organizations like ADB. So obviously these things and these basics are already in place. And as we speak, in fact, we are seeing 2 circulars come from IFSC, where they are allowed now REITs and InvITs to be listed on the exchange and traded here weekly. And they are also permitted the depository receipts, the GDRs, to also come in. And obviously now the missing piece is to get the alternate investment funds in a big way, which I think a lot of efforts are being made, but I think there are certain tax recommendations which I think have to be kind of pushed through to get the flood of fund managers to come in. And more importantly, I feel that all of this we should do without being too aggressive, because we need to be FATF compliant. We need to make sure that there are prudential regulation norms. We need to keep that balance in mind. Otherwise, if we kind of tend towards something too much without understanding that there could be risks and pitfalls which could come, because there are global money laundering risks are pretty high. So we need to be careful about it. So those walls, as long as they are all prudent and if they are all well accepted in terms of the globally established principles of the, say for example, the principles of financial market infrastructure, etc., then I think we are definitely good enough. And I think the basic building blocks are right now getting in place. And I think over the next year or next couple of years, if CIS does a similar session, we can actually start talking about some of the achievements which we actually made out here in the IFSC.
And we as a panel can claim the credit for it. So Bala, I had 3 questions come out from the audience. In your statement right now, you covered all 3, so I'm not asking them. Okay, we've got 3 minutes to go for the session to conclude. Anuradha is a stickler for time, so I'm just going to go around the table. Last thought, starting with Ranju.
Thanks, Saket. I think I'll just take off from where Amrita left. She made 2 very important points: digitization and leapfrogging. We're talking about onboarding global customers, can't do it without digitization and non-face-to-face KYC and all of that stuff. Leapfrogging, trade can be a very good anchor. Today, Indian banks are present there. You need global banks to be a part of the GIFT ecosystem. Otherwise, naturally, we are not dollar clearers. We will not be able to support the scale that comes with the GIFT ecosystem. We're confident that we can use trade as a good anchor.
Okay, Hitesh, I go to you.
No, I think Amrita summarized it so well. So, I think I'll keep the theme of leapfrogging, digitization, and also the right focus. And I think that's already there with the GIFT City team. So I think we are on our way. So it's just that probably we are discussing a bit ahead of time. But at the same time, I think the focus is there. I definitely see in the next few years a lot of ecosystem players becoming part of it, and continuing with the theme of digitization. Probably since Bala is there, I can take the liberty of edging India Exchange to probably create the first insurance reinsurance exchange. You never know, that could be again another unique proposition for the global markets to get attracted, because contract certainty then becomes a given thing with the exchange kind of setup.
So insurance exchange, new one for you, Bala. I'm not going to come to you. I'm going to leave you for the last, just for the last. So Amrita, do you have anything more to add other than what you've just said?
No, I think you summarized it very well. I'm very excited for the GIFT City in terms of what it can achieve and the potential that it has. I think finally, just to bring it all together, I think we need a very consultative approach with the entire market, not just within India, but also globally. And also, I think we need consistent, clear, but very predictable policy, because I think international investors like consistency and predictability. So that's my 2 bits.
Amrita, lawyers hate it, because we can make money out of it. You just have to understand that. Anyways, Himanshu, for you now.
I think long term, but act, because there are a lot of stuff to be done and we can do it in incremental phases. But I think at the back of our mind, we have to keep our goals straight. We want to be a global financial hub in times to come, period.
So Bala, 80-20 approach is what Himanshu is suggesting. That's the pair to analysis. Deal with 20% of the problem, get 80% of the return. Up to you now. You're on mute, Bala.
Totally agree with all my fellow panelists and Himanshu in particular. That should be the long-term vision. But typically, what we need to do is just like, for example, we did the Incredible India campaign using today. Probably the whole world knows about the Incredible India campaign. So we need to create a similar kind of Invest India campaign to get people to know that India is open for international business and you're all welcome. So that is something which I think the government should do in a big way, apart from providing tax certainty and policy certainty. And the second thing is obviously that we need to kind of be much faster in our internationalization approach and not be afraid. Today, for example, the liberalized remittance scheme, if it is being permitted to other regional global hubs from India, the same thing should automatically get extended to GIFT IFSC. And I think it's a no-brainer. And that is something which will probably be my act short-term kind of a thing. Whereas marketing on an Incredible India campaign is a long-term thing, which is basically what will make us a global financial hub.
Thank you, Bala. With that, I'd like to close this session. Ranju, Amrita, Himanshu, Hitesh, Bala, thank you so much. Great discussion. I certainly enjoyed all the punches on my stomach. And I'm sure we will meet again sometime shortly. Anuradha, we've got a lot of material out of this panel. So I leave it up to you now. Over to you.
Thanks a lot. Thank you very much.
Thank you
so much, Saket. Thank you, panelists, for joining. Thank you very much, participants. We now have a session with the Principal Economic Advisor, Sanjeev Sanayan. That's for the participants and also for the panelists. Do join. Thank you.
Thank you.
Thank you.
Thank you. Thank you.